This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now from the IARN studios in Des Moines, here's Mark.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Friday the 13th, 2025, and you're watching Ag Matters PM. On today's show, I will be joined by Kenan Layden of agmarket.net for our closing market discussion. But first, I have an interview with Grant Kimberley, the Executive Director of the Iowa Biodiesel Board, as we learn more about yesterday's announcements from the EPA and how that will affect the blending volumes going forward. Joined now by Grant Kimberley, the Executive Director of the Iowa Biodiesel Board, as yesterday the EPA released the proposed RFS volumes for 2026 and 2027. Grant, what was your first initial reaction to those proposed volumes yesterday and some of that information we received?
Yeah, it was done in a different way, so it took us a little bit more time to digest all the information, look at it. Usually in the past for the D4 biomass-based diesel category, they give us a volume target of total gallons. This time they did it based off of total RINs used, or what total RINs that would be needed for that volume target. So we had to kind of look at that a little bit more closely. But after digging into it a little bit better, certainly this is very positive overall. So we're looking forward to continuing to evaluate this further. But on the surface, this looks very positive.
So on the surface, Grant, then higher biomass-based diesel volumes, is that what we see here in the proposal?
Yes, that's what it appears to be the case. What they've done differently this time is they base it off of ethanol equivalent energy value related to the RINs. And they've also changed it in the fact that imported feedstocks and imported fuels would only receive about half a RIN credit. And so I guess this is what I was going to, how I would frame it up. The 2026 RVO that they came out with was set at 7.12 billion RINs. So then if you have to use a standard conversion rate of 1.55 RINs per gallon, that's approximately 4.6 billion gallons. And then assuming all production is domestic and uses domestic feedstocks, the EPA also revised the conversion value of renewable diesel from 1.7 to 1.6. So when you account for imported feedstocks, then you look at what you think there would be imported feedstocks and also imported finished fuel, which now only generates, this change that happened now only generates 0.5 RINs per gallon. The effective conversion rate drops. So using a weighted average of 0.5 for imports, 1.5 for biodiesel, and 1.6 RINs for renewable diesel, the adjusted conversion rate for RINs is 1.27. So then you take that math and then you go further, and the adjustment helps explain, where most of the industry and some of the major outlets and consultants have been reporting that they then now estimate that total gallon figure for the D4 biomass-based diesel category to be 5.61 billion gallons. That assumes about a 50% of the volume is derived from imports. So the current guidance is likely to significantly reshape how trade flows happen, fats and oils market happens, those kinds of things. So that's kind of where it comes down to, and that's why we really had to dig into this a little bit more deeper.
And these are the proposed volumes. So what is the next step for this guidance and these volume numbers? What would change things?
All the stakeholders will make comments on this proposal. And then we'll see if EPA makes any adjustments from there. The other wild card that we still don't really know for sure is SREs, small refinery exemptions. Those are still looming in the background. We don't really have any major clarification on that right now. So we got to see how those get resolved before the end of the 90-day comment period. and that would be before the final RVO is set at some point later this year.
And then, Grant, for the state of Iowa here, is this on its face good news for those idle plants that have been sitting there not working? Is this going to get them back up and running?
I think so. I believe so. Certainly, this should really make a huge difference. Now, the challenge you're going to have is what we've noticed here today. Soybean oil has locked limit up, so really, there's no way for any plant to purchase soybean oil right now when you have everything locked limit on the market. So I think we're going to have to wait a couple days to see how the feedstock market trades, and the biodiesel plants will probably have to wait to get more feedstock inventory on hand, unless, of course, they already had some on hand, and there probably was some of that. But if they need to make some additional purchases of feedstocks, they're probably going to have to wait a few days till the soybean oil market and other fats and oils markets settle down a little bit. But we do think this is going to get plants up and going here in the very near future.
Is there anything else you'd like to let our Iowa listeners know about when it comes to yesterday's announcement and what we might see going forward?
I think this is one very important step in the process. Now we have to go through the comment period, 90-day comment period. All the stakeholders will do that. We will do that as well. And there could be some adjustments made to this proposal. We'll have to see how those factor in. We also need to see, a little bit more in detail of their assumptions that they made on imports and the contribution that would make to satisfying the RIN volume credits that they've put in place. But on the surface, this looks like, one of the best RVOs from a biodiesel standpoint that we've ever had. And the fact that our Midwestern biodiesel producers should be able to get up and going here in the near future is very positive. And then, of course, we will also have to continue to monitor where we go with the small refinery exemptions, and to make sure that whatever exemptions are given, that they get reallocated back in the overall volume picture of the RFS program, so we don't have any erosion of these volume targets. And that'll be what we'll continue to work through and monitor in the coming days. But overall, we're looking at a very net positive day.
He is Grant Kimberley, Executive Director of the Iowa Biodiesel Board. Grant, thanks so much for the time here today on what I know has been a very busy day for you. We really appreciate it, and have a great weekend.
You're welcome. Thanks a lot. Have a great day.
Thank you to Grant Kimberley of the Iowa Biodiesel Board for joining today's show. It is time now for the closing markets, and I will be joined by Kenan Layden of agmarket.net. But first, a word from our sponsor, the Iowa Soybean Association and the Soybean Checkoff. You're watching Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It is closing markets time here on Ag Matters PM, and I'm joined now by Kenan Layden of agmarket.net. Kenan, a lot of news stories to talk about today, a lot of news moving the ag marketplace. Where do we begin with the grain side of the markets?
Biggest story today was the EPA's renewable volume obligation, their RVO proposal that they released. Rumor yesterday was it was going to be lower than trade guesses at like 4.64 million gallons blended. And then all of a sudden today you saw the market popped, and then Bloomberg had a story that it was higher than the proposal of 5.25 equivalent, million gallons of biomass blended fuel. And I think the equivalent number they're throwing around is 5.61. And I have read you be careful with that number because they have switched it to a REN versus just a million of gallons mandate. So it's going to be a REN conversion factor here. But I guess the take-home message is this is very good for soybean oil, which was limited up today, which should be used. And then, in turn, canola and soybeans and those oil crops that are traded in the market. Wheat was also up today. Some of that could have been the Middle Eastern unrest with Iran and Israel having their spit, you would call it. Israel attacked them. Iran sent some drones back. So some unrest in the Middle East to get this wheat market going. And corn followed along a little bit, but was probably the most disappointing market of the grain in the grains today.
And with the Middle East conflict, those tensions escalating and the attacks back and forth, that also moves the crude oil market and then in turn messes with things on the stock market side of things, and that spills over to the ag markets, correct?
Yeah. So, talk this morning before this news came out, I was on a call and everyone's like, well, oil is up almost $10 at one point overnight and corn hasn't done anything, which in the past, it had some of that unrest had moved over into the corn complex. Maybe wheat did today a little bit, but corn just has having a hard time getting going with whatever news is going on today. But yeah, it does go across the markets. It kind of spilled into equities a little bit. Equities were down, but rebounded throughout the day. Gold was up. And cattle were down on the day. Some people attributed that to equities. I know we'll go there in a second, but some of that might more be the ice and packing plant issues they're having.
So let's stick with that topic, Kenan, on the livestock side, the cattle and hogs. With that, all of that turmoil in the overall the overall stock markets, is that what we saw help to affect the livestock side of things as well today?
Yeah, feeder cattle and live cattle were down big today, over $4, closer to $5 is some of the feeder contracts. Last I looked here at close, but some of that could be attributed to unrest in the Middle East, pushing equities down lower, and then equities pushing livestock down lower. I don't know if that was the biggest issue. I think some of it could be some of this unknown with ice raids and packers and working at partial workforces and slowing the kill. I think that might be a bigger factor here weighing on the cattle market.
How about the hog markets? Were they able to stay on solid footing?
They were mixed last I looked, up a little bit, but yeah, way better than the cattle markets today. So cash has been doing some work there and, quietly been getting some good premiums in those more deferred contracts from the June. So quite the carry in those markets right now, and which is a good thing. And quietly hogs are, maybe closing the gap a little on cattle. Not enough, but, holding on a day like today is good news.
Lots to keep track of in the ag markets here today. Kenan, what's the best way for our viewers to get in touch for more marketing information?
Yeah, check us out online at agmarket.net. Look at some of our information and find a broker in your area.
Kenan Layden, thanks so much for the time. Always appreciate it, and have a great weekend.
Thanks, Mark.
Thank you to Kenan Layden of agmarket.net for our closing market coverage. Let's take a look at how the markets finished here today, and you can find that information anytime under the Markets tab of our website at iowaagnet.com.
July corn closes up 6 cents at $4.44.5. July soybeans up 27.5 at $10.69 3/4. Soybean meal down $2.60 at $2.91.90. July soybean oil up $3 at $50.61. Chicago wheat up 17.25 at $5.43 3/4. Minneapolis wheat up 13.5 at $6.34 1/4. Kansas City hard red wheat up 18 cents at $5.40 3/4. July oats up 6 3/4 at $3.86 1/2. On the Merc, June live cattle down 3.10 at $225.10. August feeder cattle down 4.83 at $306.43. July lean hogs up 58 cents at $109.48. July pork cutout down 13 cents at $115.78. Class 3 milk unchanged at $18.76.
That wraps up our closing market coverage for Friday and brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com. You can follow us on social media at Facebook, X, TikTok, and LinkedIn. And you can listen to our morning, midday, and closing market podcast, as well as our daily episodes of our Iowa Ag Matters podcast, wherever you find your favorite podcast, at Apple, Amazon, Google, Spotify, and YouTube. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith, Dustin Huffman, Ashton Jolly, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.